Hey guys, I want to tell you about this property that I listed as a 4-unit rental property. However, because my clients were so kind not to raise the rents for 5 years, we were getting a lowball offer. Anyway, so I suggested a cash for keys as a solution. Mind you, this is not for everyone. So let me share with you how cash for keys can help you come tax time, but only if you know how to do it right. Hi guys, I'm Desiree Turuda. I provide tips and financial education regarding real estate, life insurance, or investments. So if you would like to learn more, please do follow and subscribe. So let me continue. There are actually 2 ways you can write off cash for keys payments, depending on what your end goal is with the property. So scenario number 1, if you're keeping the property and still renting it out after. So this is a sweet spot. If you pay a tenant to leave so you can renovate, raise the rent, or bring in a better tenant, the CRA usually lets you deduct the entire 100%. And that's because it's considered a current business expense for your rental operations. You get the full write-off right away, as long as there's no remaining lease to amortize, okay? So scenario number 2, if you're selling the property and getting out of the rental game. Now, this one you can only do 50% deductible. Why? Because this isn't seen as a cost of running your rental. It's a capital expense. So instead of deducting it against rental income now, you add it to the cost base of your property. The benefit comes later. It helps reduce your capital gains tax when you sell. So let's say you actually gave $10,000 for cash or keys. You purchased your property for $400,000 and you sold the house for $500,000. So what you'll do is you add the $10,000 to your cost base, which is the $400,000, so that's $410,000. Now you can deduct the $410,000 from the $500,000, and that will be $90,000. And with that $90,000, you can actually only deduct 50% of that, which is $45,000. So that's how it goes. All right. So just to recap, okay. So keeping the property, you get the full write-off right away, and if you sell it, you only get half of the capital gains that will be taxable. All right. So always check with your accountant to make sure you're doing it right. But now that you've got the basics, don't leave deductions on the table. Talk to you soon.